Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the modern market, that is the crypto market, the NFT market, and how to hopefully make some or a lot of money on the internet. Load up for discussion today. We've got Bitcoin dropping below 110K before a little bit of a recovery here as markets sell off after the initial Jackson Hole pump. Very, very volatile at the moment. We will discuss why we think that is and what we think is the solution or the antidote to that. We'll talk Pantera seeking $1.25 billion for Solana treasury companies and other entities seeking similar. There's some very crucial details to share about that. And then finally, also big, Trump firing the Fed governor, Lisa Cook, signaling intent to put his own decision makers in the Fed. So really big headlines today across the board. I think we want to make sure we have time for all of them across the board. We've also got the latest on price action on crypto and NFTs as usual, and a general discussion on where we think attention and capital is flowing. So stay tuned for that. I'm joined today by Rahim in the co-host seat. We're ready to get into it. But just a reminder, friends, before we do, nothing that we say here is financial advice because this market is very, very risky. We do not know anything for sure. So please proceed with caution and exercise your own judgment. With that out of the way, Rahim, how are you doing? It's Tuesday, it's 26th of August. How are you doing? How are you feeling?
GM, everyone. I am channeling my inner legendary today. So I was like, let me put on like a floral polo and kind of embody his spirit.
I think he's got that one.
Could be. It's his style. So I was like, let me embody that. But it's been a good week. It's been a very interesting week, I guess. Some new stuff happening in the markets, of course. Before we get into like some of the detailed stuff, I am already seeing a bunch of people moving to Dubai. Everyone who's supposedly moving here post summer have started coming here. I met someone that we mutually know yesterday, and then I'm meeting two more people this weekend. So it's happening. I'm excited to see what happens like this winter, because obviously you have Solana Breakpoint happening in Abu Dhabi. That's massive. And then you have like Bitcoin Mina happening, a bunch of ecosystems running this year. So I'm excited. Things are cooking well.
The millionaires are moving. That's what they say. That's what they say about the people in the UK, at least. A record number of millionaires left the UK for Dubai not very long ago, or during the course of last year, or sorry, this year, or in the last 12 months or so. So I wouldn't be surprised as well if people are waiting out the summer, right? Just like, let's go when it's not so hot there. We'll figure it out after that.
Yeah, and this is just the start. Which is why I'm like surprised that people are already coming here. But I can see this just going like up exponentially. It's funny that you're saying, it's funny that you're saying like millionaires are moving from London, because it's like you have to make, because you essentially end up giving, because I was having this conversation last night with the friend who moved from the UK, that about like 40% would be like given back to the government. So you essentially need to make 2 million to give up half of that to still be a millionaire.
For the people listening in across the world, one of the funniest things is Rahim trying to understand taxes. It's like he just breaks out laughing every time we explain that you have to give some money to the government every now and again. It's unbelievable to see. But yeah, that is what we do, right? You have to give a proportion to the tax man, and you never see it back, and they probably waste your money. That's what happens.
Insane to me how the world has psyoped people into believing that this is a right system, and everyone goes like, yeah. And it's exactly what you're saying. It's such a bizarre idea to me that I'm like, what do you mean? Like, what do you mean you have to give them? I keep seeing this, Daniel got this. He talks a lot about like property and like how buying property in the US is just like such a weird ecosystem. And I remember him talking about it. He's like, you buy a property, but you are paying a certain amount of like land tax or something. And if you don't pay that per month, they take your property. So he was like, do you really own your property? And I was like, that's so bizarre.
Yeah. I mean, one of the, I definitely agree with that point. Oxy just asked in the comments, if you leave the UK, do you not have to revoke citizenship? No, we don't really do that kind of thing. There's also no exit taxes at the moment, although I've heard that too many people are leaving, so they're going to bring in an exit tax and force people to pay to leave. I think at the heart of this conversation, though, you mentioned like property, and I think it's about property rights. And I think if people feel like their property rights are being respected, then that's a place that you can do business in. That's a place that you can trust. That's a place where you can feel confident. But when security and property becomes disrespected, and one of the things that's happening in the UK, and maybe this has always been across Europe a little bit, where you have landlords and you have tenants, and when the rights start shifting so far in favor of tenants, and especially in the aftermath of COVID, this is what happened here, where there was a very, very extensive backlog of people who just decided, well, hang on a minute, do we need to pay our rent anymore? Like, maybe we don't need to pay. Well, and maybe some justifiably so, right? Like if they got laid off during COVID or whatever, like it was genuinely hard times that people were falling on. But it's like, well, okay, as the landlord, as the person who is the owner of the property, what are you allowed to do in that circumstance? And if you have your hands tied for so long, as you say, like if you're not getting paid rent and no one's going to pay you the rent, and then there's no consequences for the people who don't pay the rent, do you really own and then you want to kick the people out, but then you're not allowed to do that. Do you own your property? Like it's the same kind of question. I think the respect of property rights is probably the cornerstone on at least British law, English law, why it went so far around the world. Probably one of the UK's greatest exports in general. And but it requires enforcement, and it requires like actually obeying it and going towards it. And if the law kind of evolves to a point where it's not very strong with regards to property rights, then I think things can devolve a little bit. And you mentioned the Middle East. Security is number one, safety is number one, probably. And sure, there are other issues people might criticize, but from the perspective of that specific thing, I think it's pretty high. So I wouldn't be surprised if that's like part of the conversation of why people are thinking about these things. But any final reflections, Raheem, before we get into the show? Good to be back today. Actually, we took a day off yesterday, but go on.
How was that for you? Let's talk about that. How did it, like, you weren't doing the show? Because I feel when you don't do a show, then I'm like, oh, I'm when you say yeah, hey everybody, this and stuff, like I miss that voice. So how is it for you to not do that?
Honestly, it was kind of weird, but it was also I was definitely more relaxed this week. Like I was still working, but I just didn't do the show, and just spent the time thinking about things, adjusting some positions, doing some DeFi stuff. And I felt more relaxed by not doing the show. But in fact, it's not that the show itself makes me stressed, because it doesn't. But because I do so much research for each show, I've found recently that the timeline is basically useless. Like it's not helpful to spend excessive amounts of time on the timeline. And obviously I have to do that literally in order to do the research for the show. So like not being able to spend a little bit less time there for the research, people might have noticed I'm spending a little bit less time there in general. And spending a bit more time in Telegram, for example. We've started a community chat there. I'm really enjoying it. I think it's a high quality, high standard of conversation. So yeah, that's my reflection. Not enjoying the timeline, finding a little bit, a few more private conversations. Sticking to your conviction is easier when people are just flip-flopping so aggressively. Have you noticed that last week or two? Like people are either heavily exposed or they don't have enough. We're all-time high almost across the board. Why are people so anxious, do you think?
Yeah. It goes back to like something I was watching. I was looking at one of Gainsey's videos, and he was just like talking about, he was like, one of his favorite times ever in life was 2017 in crypto, but also Twitter. He literally said that Twitter was like the best thing in the world because because everyone was making money, but people were not gambling on like perps or like these random things. So everyone was in like way more consolidated bets. Everyone had like very similar directions, and he was like, sure, everyone was making money, but like no one was like hyper gambling. I just feel like the cycle with like hyperliquid and like different ecosystems where people are trading perps, and I've been reading a lot of takes on the timeline with like these legacy meme coin traders about how the trenches are in like the worst state they've ever been. Like there are certain traders who've had like green days every single day for the last like 6 months, and they started to have like red days on their wallets and stuff. So yeah, I just think like there's a whole side of CT that's in complete shambles because they've just like taken very high risk bets to make that 100x 1000x instead of focusing on like 5x's 4x's.
Yeah, I think that could be part of it. The fact that Hyperliquid is just the default place for trading now, and the perps is something which loads and loads of people do not know how to do that. It's like, that is advanced trading, right? You've got to be an advanced trader and sure, you can practice with it if you want, but like, I would bet if you're not a profitable trader anyway, you're not going to be suddenly a profitable perps trader. Like, this is really pushing the boundary out. So yeah, I think that's definitely part of it. But look, we'll reflect on that more as we get into the market stuff, because we have a lot of stuff to get into today. Some very meaningful stuff to get into. So let's get into the price action as usual, starting with the majors. I'm going to share my screen for the people who are watching in live on X and on YouTube. We've got Bitcoin pretty much flat now at 110, so down almost 5% on the week. Yeah, it did dip below 110. Now it's just back to 110. ETH is down a few percent to 4.4K. That's still up 3% on the week. But remember, that was a crazy candle after Jackson Hole on Friday. It went up as high as 4.9. So we're just super volatile at the moment, as the market's trying to figure out like where we should be. XRP is flat at $2.90. BNB is still super high, also flat at $840. Solana down 3% to $188. That is up 3% on the week still. Tron is flat. What else do we pick out from here? Cardano is down 1% to 84 cents. Hyperliquid is flat at 45. Sui is down 1% to $3.40. Onto the meme coin side of things, mostly a red day across the board. I think it's fair to say Doge is down 3, Pengu's down 3, Fartcoin is down 11, back to 78. Gosh, Fartcoin is so volatile.
Yeah, I think Fartcoin in general is just like not having like a good time, because if you look at everything else, I was looking at this today, the rest of the meme market is actually not doing that bad. Like, it's
Not that
crazy to
bad, right?
think.
Yeah.
Yeah, like it's crazy to think like Pepe is down like 1%, like 1.5%, whereas ETH is down 2%. And it's just like this weird thing. Of course, like a couple of months ago, I feel like when ETH would crash, you would see like everything like completely like drop down. Like Pepe would go down like 10-15%. But if you look at Pengu is down like 2%, Pepe is down 1.6, Bonk is down like 2.5. I think it's pretty interesting considering we took like such a massive VIC for BTC from like 115 to 110 and stuff. So I think, yeah, I think old memes are doing relatively better than people are realizing.
Yeah, not bad at all. I mean, if ETH's down 3%, Pengu's down 4%, like, this is why my general thesis, well, we did that segment the other day. I don't know if you were on for it, but we were talking about like ETH beta and does it exist? Like, if you want to go further down the risk curve, is there something on ETH that will double rip as ETH rips? I'm just not 100% convinced that that is the case, since ETH has put in this crazy move. I do think that there were some alts before ETH moved that really ran, like Rect, like Pengu, and some other things. But like, once ETH started putting in the move, I mean, I would be happy for anyone to put in the comments something on ETH that moved far more than ETH moved. So yes, okay, Aave moved also, but did it outperform? And if it's not outperforming, can you make an argument to say, like, just don't bother going further down, just buy ETH if that's what you think is going to go up another 50%, if the alt is also going to up 50%?
Yeah, I
Do
think
you
this
have a
is
view
very
there
much
still?
good. Yeah, I think this is going to be very similar to, you remember when we spoke about that, okay, if Hyperliquid as an ecosystem is doing so well, if their main hype token is doing so well, why would you get into any of their other ecosystems when there was a good period, none of it was doing really well? Whether it was like Liquid, whether it was like the memes, like nothing was doing well, whereas like the main major was doing pretty amazing. I think it's something similar that we are seeing, that, okay, you have ETH pumping, that's where like all the attention and focus is. We've talked about last week about how this is, I think, in the last 4 to 5 months, Pepe has formed like a weird divergence from ETH, because before Pepe would pump twice what it would with
Exactly.
ETH. But I'm curious to see, because I can remember in 22 and 20, so in 23, there was this period in February, which is where ETH pumped in like November, December, and January was like pretty flat. But in Feb, we had like a run in like a lot of risk assets. So I remember Pepe went up, I remember
Sure.
VIF going up and a bunch. So I wonder, like, we obviously saw Solana rallying like just before the weekend. It was sitting at $210. So Solana ran up like a lot. So maybe, I still think we haven't hit the maximum risk side of things when it comes to like assets, whether it's on the NFT side, whether it's on like the meme side. I think it's mostly majors are pumping. So either we see it later on, but definitely like you're spot on at the moment. Like there's like you might as well just like hold ETH.
Yeah, I really like these two comments on YouTube. Coach said, ENA, which is Athena's token, has, but not by a lot. So just hold ETH and stake it, in their opinion. I think that's pretty valid. And the second comment as well, I think, was also really helpful. The thing OG Gaming said, thing is, I think ETH needs to move and sustain that move before anything else rips. I think when ETH is super volatile, the other stuff will move with it, maybe, but they can't like outperform. And it's why maybe we saw these alts move aggressively before ETH put in this huge run, because ETH was kind of sitting around at one particular price. But yeah, I think it needs to stabilize before they can move. It's kind of the same with NFTs, right? NFTs cut, like when ETH gets super volatile, NFTs like don't know how much they should be, how expensive they should be anymore, and there's like a bit of volatility. But then once it legs up and people can rely on that price, then people can move in and say like, okay, we'll have confidence that this is the price of this asset versus ETH. So I think there's a lot of wise words there. Notorious Big Bull getting pudgy, getting the Pengu in as a shout. Definitely was for a while. At the moment, maybe just kind of going in line with ETH performance. Okay, so that's some of the price action. As I said, kind of across the board, single digit down, meme coin tracking the majors in some ways. Getting into the headlines themselves, which we're going to discuss in more detail today. We've got Bitcoin dropping below 110K before recovery as crypto markets sell off after the initial Jackson Hole pump. Rahim's going to take us through some key bits of information there, including, Rahim, I've included some stuff about Unit and all of the trading that was taking place over Hyperliquid over the weekend. Definitely interested in some of those details. Pantera seeks 1.25 billion for Solana Treasury Company, and Galaxy, Multicoin, and Jump seek $1 billion to raise similar type of treasury company. There's some crucial details we need to talk about with those in just a little bit. And then finally, Trump fires Fed Governor Lisa Cook, signaling intent to put in his own decision makers to the Fed. I think what we'll do, we'll talk about Bitcoin and Jackson Hole and Trump at the same time. Then we'll go to the Solana Treasury Company stuff. I think those two things are paired better together. Getting into some notable sales. Still got CryptoPunks selling in the 50, 60 ETH range, but it is worth noting across the NFT side that there's been a pretty big fall off in the few days we've been off air. Pudgy Penguins are down 17%, down to a 10.3 ETH floor. Rahim, I saw you tweet the other day that can people stop buying penguins on leverage? We're taking out loans. I'll do one of my special blur loan assessments here. I checked this morning. What you can see on the screen is that it kind of looks okay now. This line here, which is the floor price, for the people who are listening in, you've got all these green dots which represent the loans that have been taken out, and there's always the size of the loan is always proportional to the amount of interest that you pay. And then on this side of the screen, which is stuff that is loans which have been taken out at a higher price than the floor price, they're obviously super vulnerable, right? Because the lender does not want to have that. So if they cancel the loan, because this is perpetual lending, they can do that at any time. It means that the lender will get that and just sell it into the floor straight away, because they're not going to recover their money. They just want their money back. So obviously a much cleared up situation, because the majority of stuff is beneath the floor price now. So it looks like the situation has cleared up. Rahim, what did you see last couple of days that made you write that tweet?
Yeah, so over the weekend, when we had like the massive dump, there were at one point there were about 220 Pudgy Penguins that were in that 24-hour liquidation period. What people don't realize, like, I'm not even saying that people shouldn't take loans. I actually don't think loans are a bad thing. I think if anything, they prove that there is liquidity for your asset. Otherwise, you can list a collectible or an art piece at whatever price, but if no one's willing to pay that price for that, doesn't mean it's valued at that price. The thing that you have to realize about blur loans is, because they're perpetual loans, people can pull out liquidity at any point. It's almost like, let's take something that we were talking about at the start of the show. It's imagining you're living in London, You bought a house, you paid 20% down payment, you're sitting with your family having a nice meal, and you're like, I'm going to pay the loan over the next 4 or 5 years. And suddenly the bank knocks at your door and they're like, oh, by the way, we've pulled out all the liquidity and you have to figure out in 24 hours. If you don't pay the money, or if someone doesn't come and pay the loan, khalas, like, we are kicking you out and stuff. This is what blur lending is. It's basically going to like a loan shark and being like, oh, can I have money? Because a lot of blur farmers are kind of playing a crazy game over there. There are better alternatives, whether it's like Gandhi, whether it's Cyan. There are other platforms that I saw a bunch of people reply to this tweet. But please, like, be careful with like blur loans. They literally give you a 24-hour window. If you are not on your desk, if you miss the email, if you miss checking the platform, you will get liquidated if you don't get refinancing.
Yeah, good set of points there. I think they do. I think a lot of people are not actually. The reality is, I think a lot of people are not using them for loans. They're using them for people who own pudgies, using it as a kind of as a kind of hedge, right? It's like you buy it at a certain price, and you can protect your downside by taking out a loan at a certain price, and then it's just like if you lose it, you lose it, but you've got the money already, So I think there is a ton of people who are using it from that perspective because they actually have no intention of paying it back. Very interesting mechanic though. I love that they created perpetual lending as an instrument because I think it's super interesting as a new kind of novel mechanic. But getting into the rest of the roundup, because we want to get to the headlines shortly, you had the SVM Eclipse CEO stepping down a few months after TGE and laying off 65% of his workforce. I think a lot of these L1s, whether it's EVM or SVM, like they just don't have the activity to keep it going. So I think a lot of these are going to have to rethink who's in charge, what their focus is, and take it from there. We've got Hyperliquid announcing share of revenue to assistant fund to increase to 99%. You've got ETHZilla announcing $250 million share buyback approved. Notice this a few times now where some of these treasury companies are buying back their stock. Not entirely sure what that means or how that's supposed to operate when they're supposed to be buying tokens with it, not their stocks. So and I've seen like some smarter people than me just raise a question about that too, as if like, guys, this is obvious. You're meant to you raise money to buy the tokens. Where's the money coming from to buy back the stock? Literally. Someone's got to have it.
It's the flywheel meta. Just buy back your own stock.
Yeah, but then there's no money to buy the tokens anymore. So
it's just like a very high leverage bet that you're like, okay, that the shares trade at a premium price, so I'm going to buy it. But are you taking, I don't know, are you getting loans again? Yeah, it is a pretty wild direction to take when by default that shares trade at like a premium, and you can use that to essentially acquire more of like the internal asset.
I think that's the issue though. A lot of them are pushing towards, if you look at this block, let's look at the Blockworks dashboard for these treasury companies. I'll just refresh it to put them up to date. I think a lot of this stuff is starting to not trade at a premium, or it's getting quite close to not being there. So when you have, let's find some ETH treasury companies. We've got even Bitminers trading at a 1.15 mNAV. Like
that's pretty crazy.
That's close to not being at a premium anymore. SBET's at 1.02. Also, that's barely no premium. BT is 1.23. ETHZilla, we don't have any numbers for here. BTCS 0.6. You've got some Bitcoin treasury companies. Obviously, MicroStrategy's got 1.58. That's okay. SMLR is at 1.01. Like, okay, a couple of these Sol ones still have a premium for now, but
yeah,
I think the bet here is that these premiums start to disappear, right? And then, I don't know, people think they need to buy their stock back, but which money are you going to do that with? Because the money's supposed to be for the shares. So big question mark around that. Obviously, we've flagged treasury companies as the thing to keep your eye on, and a potential trade at some point. Maybe to buy the shares themselves if they are proper companies, once you've read the details and they're trading significantly under mNAV, maybe 20 to 40% under. I think that was the GBTC trade in the last cycle where that seemed to work out for people, but we'll keep an eye on that. Definitely think it's worth paying attention to, though. A couple other things. Anchorage Digital announced venture unit to back early stage on-chain protocols. B Strategy announced plans to launch a BNB treasury company with Easy Labs backing, targeting a $1 billion raise. And then a few other cool bits of news around the space. Prediction Market Kalshi hires influential CT writer John Wang to become their head of crypto. Prediction Market's getting a lot of love on the timeline at the moment for their potential. Football.fun TVL pulls back after explosive growth over the weekend. This is the one thing I would have loved to chat about yesterday if we ran the show. Football.fun, incredibly fun football trading game football fantasy trading game where you can just kind of pick players, trade them almost like meme coins, but they've got some excellent functionality to stop people like dumping all their supply in one go. They play around with the fees, they play around with how much you're allowed to own. And so the TVL went as high as more than $100 million, $120 million at one point over the weekend. I think it's pulled back to like 80, 90 now. So we will see. I had some fun on that over the weekend. I bought a few, made some profit, and now I'm still holding my cards. I think I'm going to play. I'm going to play this year. I'm a big soccer fan, as you may say, and I think they might have some other sports coming down the line. So that would be fun. Go on, Ryan.
It's sacrilegious for you to say soccer. You're based out of the UK.
The thing is, I'm a big NFL football fan as well. So I like football. I like all of the footballs. I do not discriminate against the football matches. So I don't know. I'm happy to. I've changed since I've joined this industry. Yeah, it's just.
Yeah, no, that makes sense. I think it's a really good ecosystem. We can talk about it like towards the end of the show because I know we have a lot of stuff to go through, but definitely a very interesting DApp we've seen after a very long time in the space. That's just like fresh.
Exactly. Fresh, new application. Pudgy Penguins announced Soulbound token for early signups for Pudgy Party game on Polkadot. If you've got a Pudgy Penguin, I'd suggest you do that. Monsters game on Abstract revealed tokenomics explainer. And finally, Moonbirds announced partnership with Football.fun, where holders get a free pro pack and 2K rep points for verifying NFT ownership. I guess we're at that time again where NFTs teams should be getting partnerships with these top new apps coming out. I think that would be appreciated. So that is the roundup to get you up to speed with everything that's going around space. We've got some important parts of the news to talk about today. Ryan, I'm just curious, before we get into the main stuff, is there anything that's catching your attention, on your mind, whether it's portfolio stuff, trading stuff? What's on your mind?
I think we can kick it off. I think we ran through. I definitely want to get to the football.fun stuff towards the end of the show. I think that would be something that we want to talk about, but maybe let's go through the headlines.
I think let's just do that now for a couple of minutes because we still have plenty of time for the headlines, which is the main stuff. But so, what do you want to say about football.fun? Like, it's very, very interesting. It kind of exploded over the weekend. What kind of opportunity do you see there? Why did it interest you so much?
Yeah, so I think if you take like two verticals, I made like a tweet about this, but it's you have prediction markets and then you have fantasy sports. They're like somewhat of like binary ecosystems that you either bet on this person or you don't bet on this person. I just think I remember there was this narrative where we were going to use meme coins as a way to onboard new people. It is a very complicated ecosystem. You're trying to find which is like the perfect Taylor Swift coin. Did it come out on Bonk? Did it come out on like Pump? It just became like so complicated. Whereas when you go to football.fun or when you go to like prediction markets, you're using something that's relatable to you in real life. You're like, okay, I know these stars, I know these players, I followed them for a while. So I thought that was just like the more I think about that, okay, we're so far into the cycle and there's no data metric that shows that we've had like an insane amount of people joining in. So I definitely think ecosystems like this are like super nice, especially because sports betting in general is going massive in the Web2 industry. What I also like is just like their tactics on the tokenomics side, which is like, if you hold like some of their fee structure is that if you hold a lot of their token and you try to like dump it in one go, you actually end up paying 25% fees. So they've kind of done this to prevent people from manipulating prices, because if you go and check individual market caps, like even like their highest coin has like a 7 to 8 million market cap and stuff. So if you go down down the route of like even the fourth or the fifth player, they're trading sub 1 million. Very easy very easily, like you can manipulate them, and they put like a lot of these guardrails. I remember, I think one of the closest products, and definitely not even close to how the structure is, was Frentech. In Frentech, on Frentech, you would buy a key, you would pay 10%. When you'd sell a key, you would pay 10%. It was on a regular bonding curve. If you had 50 keys, you could dump 50 keys in all together. So I like the mechanics they've put in to prevent, if normies come in, that like, you know, your degen crypto traders who are using bots or whatever don't try to like really screw over retail. So I really like that. Plus, yeah, like I think like the direction they've taken on the UI, the UX side of things have been just like really refreshing to see in this space at this point. You know, we just haven't seen a good consumer app in a while.
Yeah, honestly, this is really good. Like it, as you said, it's really good. The UX, just look, I'm scrolling the website now. It looks great. The app works great. It's just really, really well put together. I'm a sports fan. I'm a big sports fan, and like being able to navigate around. There's a few things I was like, okay, I wish I'd be able to click into like a team and see the full team and things like that. But aside from that, in general, there was like it really, really made sense. Like the user journey of, okay, I want to see what the trading is, and I want to see what my holdings are, and I want to see how my squad's performing. It really, really made sense, and it was really good. Really, really good. Really impressed. And I actually do agree with you on the part where some people were complaining about the fees, right? There's 5% on every trade, 5% fee on every single trade that you make, which is why they're printing fees, which is good for them. But and then in heightened times of trading, it can be up to 10%. Or I even saw certain times it was like they wanted 25%, 25% cut, and people were getting annoyed at that. But like, look, if you want these things to trade properly and discourage, you know, encourage holding, playing the game rather than aggressive trading, then yeah, I actually am for those types of almost governmental block decisions that impose incredible taxes on in the most what's the word, in the most kind of volatile time, to prevent people just trying to send one player really, really high or get them too low. And you're not even allowed to own a certain amount of a player. So it's not, you can buy up all the supply of the best footballer in the world. So like, I think it's really, really, really well thought out. I don't know if all the mechanics are perfect at this point. Maybe they can tweak them as they go along. But as a starting point, really good. And looking forward to see how they kind of continue to build out. I also think this is just a great opportunity. You know, we always want to assess things on a opportunity basis. If they keep, you know, and the question is if they keep this up, and I believe, if I'm right, I think I saw this, they, you know, have plans for future sport. If football, as in UK football, is not the one that you like the most, or worldwide football, I should say, not just UK, is not the one, and it's American football or basketball. I can't remember exactly which other ones they've got down the line, but this is a brand that can create this or replicate this in different ways for different sports. And that would be really, really exciting for a lot of people. So I think you want to get in and participate even now, just so you can get involved. And, you know, I guess there'll be a token at some point too. So playing around is probably a useful thing to do.
Just to add one more point for like people who haven't like looked into it, like it's not your regular meme coin trading mechanics. Like they also have like skill based, which is very much dependent on exactly how fantasy sports works, right? So you have the tournament going on of how these performs, their points go up and down, whether people are getting injured. So there's a skill based aspect to it as well. It's not going to be like completely veiled by just like degens who are applying a lot of capital. So if you are into football, if you are educated on that, there are multiple different ways to play it, and I think it's a fun mechanism rather than just like your regular degen trading, I guess.
I agree. Good opportunity to play around with something that's actually useful on chain, which doesn't happen all the time. Okay, we've got some very good pieces of news to dive into today. We've got three. We're going to be talking Bitcoin price, the recovery or the drop after Jackson Hole. We'll be talking the Solana treasury companies, which are being raised for, multiple people raising up to $1 billion for those. And we'll be talking about Trump firing the Fed governor. Rahim, you do Bitcoin and this kind of aggressive sell-off over the weekend and into Monday. And then I'll come in with the Trump stuff just after. What do we need to know here about the price action and what's kind of been going on post Jackson Hole on Friday?
Amazing. So on Sunday, basically, like, the weekend was going perfect. We were pumping. We had like a good dovish sentiment from Pubble when it came to them changing their stance on like how inflation rates would benchmark of how they move as an economy. Everything was going perfect, but then we had like sudden massive VIX on Sunday evening where Bitcoin went from 115K in like in 3 minutes to about like 110K. And there was a lot of like speculation of like what the hell happened, like where is this coming from. And then we got to the data of it. So all of this ended up happening on Hyperliquid, by the way, through Unit, where there were a couple of OG whales that unloaded Bitcoin. And when I say OG whales, there was about 19,663 Bitcoin across two entities that was essentially sold off on Unit, which amounts to $2.2 billion. And here's the kicker. They ended up buying, from all of that amount, they ended up buying ETH. So they bought about $450,000 ETH, which amounts to $2.2 billion. I think this is like crazy on a couple of levels. I feel like there are a couple of discussions to have on this. I think this is super bullish for Hyperliquid, for decentralized platform ecosystems. Like, I think it's pretty amazing that we are almost like, in some ways we believe that, okay, because Hype hasn't hit all the exchanges, it's still considered like, a very niche product that maybe it's only the degens on Twitter are using it. But there are OG crypto holders who've started like using it as a platform for transparent, for what do you call it, anonymous reasons, and at the same time for like liquidity and like safety reasons. So you had such a big sell off over there. They ended up making about $4 million in fees in just like 2 hours. They surpassed volumes of Coinbase and Bybit spot volumes. So I think a massive W for Unit, for Hyperliquid. But keeping that aside, just coming back to like the market sort of things, this essentially tanked the entire market. So we saw like ETH tank, we saw Solana was trading at like 210, dropped down to 185. Massive sell-off. It's mostly been through a bunch of like a handful of wallets. So what it's alluding to, in my point of view, is the stock market opened up, like the futures market opened up flat that night for Monday morning. That remained okay. If you look at the M2 money supply and you see the divergence crypto has had, is just like unprecedented. M2, global M2, for like people who have like no idea, I guess like in simple ways, is to think of it as like liquid cash that people have in accounts, in cash, or in like liquid assets that you can convert to money in a very easy manner. They come under the global M2 uh, uh, data point and stuff. So all the countries around the world have slightly different metrics to put it, but that's essentially what it's alluding to. So there was no political discourse that essentially led to this market sell-off, at least from what we are seeing right now. There was no other economic data point that led to that crash, which is where you have us looking at the global M2. We also had Tom Lee, our good old, known as like Ethereum dad at this point, who's who's been calling for ETH bottom at $4,067. So we're going to see how that pans out. One of the other metrics that I thought was super interesting that I saw over the weekend, that this is also one of the first times in the last 8 years we are seeing the BTC ETH correlation chart breakout. That is something we've not seen in like 8 years. So that's, I think, very interesting. And then you're seeing like these Bitcoin whales are moving billions and billions of dollars from Ethereum to from Bitcoin to Ethereum, has just been like a phenomenal thing to observe. But yeah, market has been in nosedive since then. We've dropped again below 110K as of this moment. So we got to see what happens when markets open today. But that's kind of like the gist of what happened like since Sunday.
I like it. Very helpful summary here. I'm wondering what my key takeaway is here. I think, I don't think much different to what I've been saying the last couple of weeks. I've been saying I think we needed to correct down because people were pricing in a rate cut. We've been living as if rate cuts were like absolutely guaranteed, and then we kind of needed to correct down either way. And then I think what happened on Friday was basically just too volatile. So if you look at the ETH chart on Friday and you see what happened there, like this is not like you can't go up in this particular way. So it was, so I don't know where Friday is, around here, right? It was 4.249, right in a straight line to 4.28. Sorry, 4.8. So that's just like a huge wick. I think it was like 15% or something in, on the announcement that Powell was seemingly a little bit more dovish. And I think we're just in a period now where, as I said before, like buying dips, I think is helpful. That's what I had been doing before. Also kind of positioned for the other way, because you're also simultaneously seeing some pretty nonsensical stuff on the digital asset treasury side. But in general, I think it's still probably wise to I think the dips are probably for buying here. But what was the final thing I was going to say? Yeah, I think we needed to correct down. Then we got like overexcited, and now we're somewhere in between, right? Like we're at 4.4K. 4.8 was like us getting too crazy. I think everyone slammed on the leverage again, and you can't go up when everyone's going to slam on the leverage in that way. So I think we're just kind of figuring out the appropriate price when there's been a lot of volatility. If you look at the month on ETH, look at this.
I think there are also two ways to look at this, right? So I completely agree with what you're saying, but it's also, if you're just using the data metric that you were saying, that on Friday we pumped from 4,200 to 4,900, that we needed that sell off. Like in some ways, at least the initiation point of that sell off didn't come from an overall market stance. It came from a couple of wallets like really nuking the market. Yes, you had about like $250 million that got liquidated in like 5 minutes. So you obviously have people gambling like crazy on hyperliquid this cycle. So I think that's definitely not been good for up only charts. But in some way, like if you look at it, like I agree with what you're saying, but like a lot of this sell-off came from like a handful of wallets. Because if you look at the overall crypto chart, like Bitcoin, about 2.5 weeks ago, it was at 124K. To compare that, where it's sitting at 109K and you're looking at ETH at 4,400, I think ETH is doing phenomenal. So I feel like if we were going down that route, so there are two ways to look at it. Either we still have that correction to go through, which is the correction that you're talking about, which ETH needs to correct a lot because it's still trading at like a very high price compared to the rest of the market. Or this is just like this whole treasury company, the way the economy is running, it's just gone a different direction. We just have like a lot of PTSD, so we keep believing that, oh, market's going to connect, or this is too high, this is not right and stuff. So yeah, I feel like I'm excited to see how this week pans out and stuff. But yeah, it's kind of interesting to observe those two different schools of thought at the same time, I guess.
Yeah, I think pair that with this being August, low liquidity environment. I think the prices are much more likely to move in these ways as well. Yeah, okay. I think that's helpful. You mentioned just the general environment. One thing that has been going on simultaneously is this stuff about two things I want to pair, because I think I missed this piece of news over the weekend. Two things I want to draw together here for the next 5 minutes. A, Trump fired the Fed governor, Lisa Cook. This was overnight. The first piece of news is overnight. The other one was from a few days ago, just signaling the direction of the government administration of the whole United States at the moment. So why is this significant that he's fired the Fed governor? And look, the details, I guess, are kind of relevant. Maybe they're not hugely relevant. There's some I don't know, some mortgage fraud allegedly, which might have been the same thing that they were trying to get him on when they were going after him. I should know the details, but for the benefit of analyzing the market, the detail doesn't actually make a difference. Politically, you're fine. You can argue of the details. It's not relevant for the market. The relevant part of this for the market is that obviously this governor has a vote when it comes to lowering interest rates and stuff like that on the Fed, and removing them means that there's an extra space for him to put someone else in who will be more amenable to the type of plan that he wants to put forward, right? He wants rates cut. He's not getting that from this group of people at the moment. There are a couple of dissenters who are kind of more in line with him, but he wants to get this happening as soon as possible. At least that, I mean, even flirted with the idea of removing Powell, right? Not too long ago, and the market didn't seem to really like that. So maybe he decided, right, let's go after some other people. And so that's the significance of it. There was some commentary that came out on the back of it. Felix from Blockworks, who does a really interesting podcast called Forward Guidance, said it's looking quite likely that Trump may strong arm a majority vote of the FOMC committee in the next 12 months. Pretty much the only thing holding it back will be Senate confirmations. And when you say strong arm there, you mean cut rates. This is what I want. Put the people in there that's going to do what I want. Otherwise, you're going to lose a job. We're going to go after you, or something of that nature. There was a quote comment on this asking, pretty much means that over the long term, the dollar is cooked and assets go to infinity. And this is a nuance point, which I think people should consider too. Assets do not go to infinity when you trigger capital flight from unstable monetary policy. Study any emerging market crisis ever. And I think this is the idea that people always assume that, okay, I think a lot of people in this industry, including ourselves maybe at times, you know, the worse the government gets, the bigger your bet on crypto, right? Because it's like, look, you're going to keep mismanaging this stuff. Therefore, I'm going to put all my money over here, and therefore all of this stuff will just go to the moon. But I guess what part of this point is that if things become so unstable in history, making people take their money out of the country because they are so unable to trust means that people are not necessarily going to be super confident in assets either, necessarily. That's the perspective being articulated here anyway. And again, the final point, careful sharing on the decimation of monetary policy independence, because you think it might pump your portfolio a few percentage points. Like there is there's a bigger point here that is kind of above, you know, the financial level that we're operating on, which is these two things have historical reason for being separate, the Fed and the administration. And it does appear to be the case, like, look, these things are about to merge, very much so, and there's nothing that anyone can do about it. And I just wanted to pair this with a different bit of news over the weekend, where I saw that US is to take a 10% equity stake in Intel in Trump's latest corporate move. This is a really interesting one where President Donald Trump said on Friday the US is going to take a 10% stake in Intel under a deal with a struggling chip maker that converts government grants into equity share, the latest extraordinary intervention by the White House in corporate America. So I guess what they're saying is, look, if we're going to provide you with stimulus to help your business in any way, then the country should stand to benefit from that, rather than us just keep giving you money endlessly. There is actually a little bit of precedence for this. I know during COVID, I don't know if it was this article that shared it or whether it was a different one. I know that during COVID, even the UK government, would be giving out certain stuff to businesses, and then they took a little bit of a stake in it. In fact, I think this BBC article shared it. Here you go. During the great financial crisis of 2008, so this is actually a different example, but I'm pretty sure the UK government did this too. The US government took a majority stake in automaker General Motors, which was poised to enter into bankruptcy protection. It eventually exited its position, incurring a loss of about $10 billion. So it's not the first time that governments, states will kind of provide stimulus and take a stake in something, maybe in a period of extreme volatility to try to provide some stability. This seems a little bit more aggressive in the sense that, there's been no financial crash. Everything's at the top of the market at the moment. This is a conscious decision to say, no, if we give you money, we want a stake, like the American state wants a stake. And I think a lot of the reaction to that, in the same way, although on some level, you've got the administration merging with the Fed and like, look, we're going to run this stuff in a centrally planned way. You've got businesses doing what businesses do, but if they ever need support, it's like, well, no, the state is going to be a part of that. So you have this very odd situation, both on the monetary policy level and on the corporate business level, which Peter Schiff called out, who usually obviously people in crypto like to make fun of because he's kind of anti-crypto, very pro-gold. He said this, let me get this straight. The Republican Party now favors concentrating power in one individual to impose protectionist tariffs, centrally plan the economy, nationalize stakes in private businesses, and use the Fed to create massive inflation to monetize soaring budget deficits. I can't see. I think it's that's fairly accurate. It's a strange situation that we're in, where I guess it's the more conservative party that is opting to kind of pursue this particular course. So this is how I wanted to pair this. Like I think it's an interesting dynamic here, where yeah, the power of the administration is kind of expanding, and I guess people are trying to figure out what that means for asset prices. There was one interesting comment. This is my final point before I'll throw to you, and then we'll try and hit the final headline too. Is you kind of just considering like, okay, what do we do? There's an expansion in the domain of power from the administration, and this quote said, "Timeline is basically Trump fired Lisa Cook, so the real estate asset guy says get long real assets. The tech guy will say you got to be long tech stocks. The FX guy says short the dollar. The bond guy says steepener. The gold guy says go long gold. So the takeaway is just do whatever trade you've been doing all year. That's the final conclusion. Whatever it is that you've been doing, just do that more, because the general thesis of the dollar kind of getting weaker, at least against assets, if this seems to be the path that we're taking, will be that the dollar gets weaker, at least against assets, if not against other currencies. So curious for your thoughts there, Rahim. Obviously gone in a few directions. What is your general reflection here before we hit the Solana Treasury Company news?
Yeah, considering the last two precedences, for example, that you were alluding to, which is like obviously the 2008 global financial crisis, massive crisis in human history, and COVID, which was another massive crisis. It feels crazy to take this stance right now. So there are two ways to look at it. Is either you are going down this direction where Trump is like, you know what, like I'm focusing on making America great again. I want to bring a lot of like value to its citizen, kind of undo all the mess ups of like the past history. So that's like one heroic take to take. The second opposite take would be essentially that, oh, are we at the cusp of like some major financial crisis, that it's almost like all of this is like being like smokes and mirrors around the world. That you obviously have the announcement that Powell made during Jackson Hole, which is their stance, changing their stance on the 2% inflation concept that banks have in general. So you have that changing, and now you have like this aggressive $10 billion stake. Like Intel, I just checked, they're worth $100 billion. They're listed as like $100 billion company. So yeah, I don't know, like it's pretty, in some ways, like it feels very scary to take like this very strong stance on this company. If I'm not mistaken, Intel is not the only one they've spoken about getting into. I saw some other tech company, I think a couple of days ago. I don't know what it was, but it was definitely not Intel. So yeah, I don't know, like it definitely seems like a very unprecedented situation. To be honest, like I don't really know. It just goes back to something I feel like you've been talking about a lot, is that you can try to think that, oh, the market's going to last till the end of this year, end of next year, but I just think there's so much stuff that's happening in the traditional world that's just like unprecedented, that like don't try to gamble that. Like just take your profits out. It's just like a very crazy environment.
Just one, yeah, look, I like everything that you're saying there. One final thing for me, where my mind goes, and maybe it's kind of paranoid and kind of, it's not really conspiracy theory or anything, but like where my mind goes when, the state starts getting involved in corporate enterprise and things like that, my mind just goes towards, and this is in the worst case scenario, just like asset confiscation, like the desire for the state to kind of get their claws into, I mean, you get taxed a lot anyway, right? That's the starting point for them to take a share of your upside. But if they're going to take a literal share in your company, and then in the worst case scenario, if you follow that kind of logic through, you start taking a share of your assets. And I think that's always been one of the fears for crypto in particular, where you know, there's only a certain amount of Bitcoin, and the only Bitcoin the government had is from seizure. So I saw someone do a funny tweet where it's like, well, I know I have another way that the Bitcoin, you know, they keep saying they want to accumulate some in a budget neutral way. There's one way. There's budget neutral, which is just take the Bitcoin that you want from the people who have it under some kind of seizure. And look, I you know, that might sound extreme at this point in time, but I think it's good to keep an eye on and assign a proportional value to that. Like, look, what's the likelihood of that happening? It's not zero for sure. Like people seize assets from people. People make it really hard to move assets that you want. You see that happening around the world. So just something to assign a number to, I think, and keep on your radar. Did you want to make a final take there, Rahim, before we hit the final one?
Let's hit the final one because I know we're running low on time.
All right, let's do the final one, which is this news. Two bits of news and then one important point. So sharing my screen again for the final headline. This is pretty big. First, Galaxy Jump Multicoin Capital teased $1 billion SOL bid with Solana Foundation endorsement. This is for a Solana treasury company. In other news, Pantera Capital plans a $1.25 billion raise to build a NASDAQ-listed Solana vehicle. Also, the plan reportedly involves an initial $500 million raise, followed by $750 million through warrants. So, and then another one coming out yesterday as well. New Solana treasury company, eyes raising over $400 million with help from Powerify and Pantera. So lots and lots of demand for creating these kind of entities. However, there was this just to be aware of before we close the show, very good set of traders who I watch quite a lot. They do the 1000X podcast, Jonah and Avi. He shared some of the details. I've got this up on screen. I won't do the audio. I'll just paraphrase what he said. He shared some of the details of the Solana DAT structures. And this is not all of them necessarily. This is some of them. He didn't say specifically which ones. But he said in order to fund this treasury company, people were being allowed to put in locked Solana. So obviously there are some people who have locked Solana on a multiple year time frame. So what this vehicle is allowing them to do, and I'm not saying it's any of these ones specifically, but whichever ones he's seen, and this is what people need to be aware of, is that you can put in your locked Solana, then you're going to get shares in the company of an equivalent amount, right? Because the whole point is that these companies will trade usually at a premium to the mNAV, if not at least at the mNAV. So you're going to put in locked Solana, you're going to get back liquid shares. So this is a way to sidestep any type of vesting period, any kind of lockup that you might be traditionally used to, in order to be able to sell your locked Solana onto the next person, onto retail or anyone else. So I think that is super, super important for people to know that is one of the things that is happening. Again, that might not be all of them. Some of them, I believe, based on conversations I've had and what I've heard other people say, is that they are, structured more thoughtfully and are not designed in that way to allow people who are locked up to simply sell as soon as possible. But I think it's helpful to know that is one of the things that's happening, and to do your research and check who is doing what to prevent that happening to you, buying someone else's locked stuff, just getting it dumped on top of your head. So always want to be aware of that. Ryan, final thoughts there before we close off?
Is there I have a quick question actually. Is there they're basically doing a mix? Because what happens if they need to sell the Solana? Like if they start going under and they need to essentially sell the asset, they obviously can't because it's locked in.
Great question. I don't know.
Super scary. That sounds like a I hope they're doing it in a mixed way where you obviously have a lot of liquid Solana and stuff, but that sounds super crazy, because if they have to sell, where does that money come from and stuff? Do they become I don't even know. That's very interesting. Need to look into it, I guess.
Again, these are new mechanisms, new vehicles, which we kind of got used to analyzing crypto coins and understanding VC unlocks and all this stuff. I think if you want to play in that share game, in the treasury company share game, these are the things. We have genuine questions. We need to find the answers for them if that is the game that you want to play in. I don't find myself playing the game too much. I did get some SBET some time ago, and I think I traded it a little bit. I'm still holding some because I wanted to get a bit of a exposure to it to understand it. But it's not a game I'm playing hugely. I think the trade there at some point in time will be to wait for them to lose the tie to the mNAV and buy the quality ones at a discount. And so, I don't think there's a trade to be had there now necessarily. That'd be my headline thought. But Ryan, that was a great show, man. Had some big headlines to discuss today. I hope that was interesting to everyone as usual. Just a reminder, we do this every single day, Monday to Friday, 7 a.m. Eastern time for 1 hour live on X video, YouTube, and you can catch us on Apple and Spotify podcasts too. We will be back again, same time, same place tomorrow. Thank you so much for joining us. Thanks to my co-host Rahim for being with us today. We hope you have a wonderful day. We'll see you tomorrow. Take care. Bye-bye.